Now let's roll into oil right now.
Let's do it. So it's Wednesday. We got crude oil coming out at 10:30 a.m. Eastern Time. We'll pull up kind of the live feed. Of course, we had the API reporting 7.83 million barrel build last night. Quite a number. Jumping back to the NADEX platform, we'll pull up that crude contract. So we had talked about it, some volatility, man. Yesterday, you had oil trading from 63.30 down to about 61.30.
Yeah.
We trade all the way back up to above 63 bucks. So talk about $2 moves both directions, and we're right kind of under that 62.26 currently in the price of crude. So we get the EIA numbers at 10:30. We got 9 minutes until that comes. We're going to look at setting up possible volatility trades, right? We'll jump to the 11 a.m. expirations first, okay? You got spreads. Now, what does happen here is the volatility we've gotten, these spreads sometimes vary on where we line up. Now, you do have the option if you wanted to. You could use $62 for kind of your pivot point. We have exposure to the bullish side with 62 to 63.50. To pull it up, you'd have exposure. That would be your bullish spread. You'd have 24 cents of intrinsic value, which is going to represent about $24. So that leg alone is going to cost you 35, and then on the bearish side you could protect yourself for some volatility on the bearish side, of course being out of the money. So you're looking at about $44.
Okay.
Keeping in mind that it's a bullish bias trade when you have such a head start.
Right.
You know, it's not just a volatility trade because you get 27 cents of volatility to the downside in this trade and you're at your max loss, right? Versus you just get about 9 pennies of movement to the upside and you've covered your bearish spread where you're now at break even. So those are your 11s as they line up. Let's jump and see how the noons line up here. Jump into the 10 to 12s. So what's awesome about this is you have two very similar trades here, just kind of different in terms of how they're set up. This is where our 11 a.m., which is going to use $62, so you'd have some bullish intrinsic value. But let's say you wanted a volatility trade, but you wanted bearish intrinsic value, right? You wanted a bearish bias. Well, the noons provide you $62.50. So there's your bullish trade, going from 62.50 up to 64. Now this is the one that's going to be out of the money, right?
Yes.
Now you do have that extra hour, which you're going to add to the premium that you're going to be paying. So the bullish legs cost you about $14 to $15 right now, and your bearish trade, there we go, going from 62.50. Same thing, down to $1 to 61. That's going to be the one that has all your intrinsic value this time. So you're looking at about $55 versus $45. And keeping in mind that the 11 a.m., to back it up, was going to use 62 as your pivot point. So you'd have intrinsic value to the bullish. So if you're a little bit bullish, you could take the 11 a.m.s, where you start with a head start to the bear. If you're a little bit bearish, you could take the noons, where you have the bearish intrinsic value.
And we wait a few more minutes, and we might be down to 62.
We could. And then you could jump back to the 11s, and you could take a pure volatility trade, just paying premium, on both sides of the trade. And then I checked too, even jumping around some of the dailies. Again, if it does get that 62, so these are going until 2:30. Now you got $5 of exposure instead of the $1.50, and again 62. So here's your bullish spread. You're going to have about 20 cents, not about exactly, of intrinsic value. The rest being premium. So you're paying 46, representing the 46 cents above 62. Of that, 22 pennies intrinsic value. The rest being premium, and then same thing. You could have it on the flip side, $5 to the downside, all premium here, out of the money spread. 24, so you're looking at $70. And again, this one taking upon itself a little bit of a bullish bias. Yeah.
And you know what's pretty wild here, folks, is that this is showing that the oil market right now is way oversupplied, because we had the dollar crash by half a penny last night, and bottom line, with oil at lows, that should help oil go higher.
Sure.
You know, maybe that's why it went up $2 last night as the dollar was going down.
Sure.
But you know, that's, you know, oil's priced in dollars.
Yeah, at least on this chart it is. Right. Exactly. Yeah. So we'll check back. We got about 5 minutes till those EIA numbers come back in. We'll get those numbers, see how that market shakes out.
Welcome back, folks. Crude inventories.
There's your headline number. Crude oil inventories rising 5.78 million barrels. That's more than what we're expecting. So we saw in here, and where is it? Median analyst estimate, Bloomberg survey, about 3.2. There it was, is what they were looking for. Jumping back to the charts. More oil than you'd expect. But guess what? Getting a little bit of a pop. Pretty interesting. We saw a spike down to 62.09. So we're trading it, call it 62.25 maybe, as we were jumping around there. So you did initially spike down about 15 pennies. but we're right where the price was. So the market kind of shaking off more oil than they might have been expecting as we dig into those numbers. But pretty much trading right where we were prior to that number. We're only a minute past the news, but nothing too substantial so far.
Yeah.
Yeah.
It's interesting how that chart's setting up. It's like, okay, so it's green because I guess it was red when it first went down. Now it's green because it's popping back up.
Yeah, I mean, the bar is green only
Right.
because it you know, in the span of 0.1 seconds, right? From 10:30 exactly to 10:30 in 1 second, it jumped down to 62.09 to open. Well, no, yes, it opened at 62.11, and this bar closed at 62.37. So quite about 26, penny jump. We'll see. A little bit lower prices, and that should be what you get. You get more supply, it's going to be cheaper to buy that supply. So that should make sense, but nothing too substantial so far. And let's jump back to that number real quick. I just wanted to see as they break down maybe and give us that. Which one are we on? One maybe. Pull up top live. Whoops. Because it's especially interesting with the type of volatility we've gotten, and maybe the market just not to say not as interested in this number.
That's what we're looking for.
Yeah, but maybe there's just so many other factors going on right now. The Iran sanctions, the waivers getting passed, that's probably more of, that's more of a determining factor maybe. So there's your number. Where are we in the total? Cushing crude up 2.4, PAD 3 up 4.9.
Look at even gasoline's up.
Yeah. 1.8 was the build versus a decline of 1.7 they were looking for. Distillates minus 3.4 million versus an estimate of minus about 2 million. Yeah, so we'll check back in. Crude oil inventories rising 5.78, which is the headline number you'll see.
Good number.
It is. It is.
Welcome back, folks. Oil is getting toasted.
Checking back in. So we're approaching the end of the 11 a.m. hour, and crude, quite an acceleration to the downside. To recap, we're trading about 62.25. There's your 10:30 action, and we're now approaching 80 cents below that level. That's some volatility for you, man, and we're approaching that number that we the lows that we had yesterday in terms of
Tom
right
from
down on
Plymouth's
that
making
level.
money.
That's right. We'll see where that ends up. Quite an acceleration.